Crude oil looks a little soft in the early hours on Thursday. Before we start, a quick word from our sponsor. This video is brought to you by XNES, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The light sweet crude oil market fell a bit in the early hours on Thursday as we continue to hang around the $60 level. The $60 level, of course, is an area that a lot of people will be watching as it's a large, round, psychologically significant figure, and it's the top of the gap that formed during the session the other day when the Americans announced another round of sanctions against Russia. At the end of the day, though, there isn't a whole lot out there that changes the overall outlook for this market because despite the fact we have more sanctions, let's be honest here, the Russians have been able to put oil into the market the entire time. I just don't see how that changes. Furthermore, we have to worry about demand, and demand might be a little sluggish here. I look at $62 as a bit of a short-term ceiling, and I do think we probably generally drift lower. Brent markets look very much the same as we are hanging around the $64 level, and it looks like we are getting ready to try to drift towards the bottom of the gap. We'll just have to wait and see. The gap being filled is something that makes a bit of sense, but really, I think what you're paying attention to more than anything else is that the $60 level is a major floor in the market. A rally at this point in time, the $67 level is significant resistance right along with the 50-day EMA. But again, I think this comes down to a oversupply in the market that really at this point in time you have to keep in mind that if the global economy is in fact slowing down, that oversupply is toxic for pricing. My name's Chris. I work for FXEmpire. If you enjoyed the video, give me a thumbs up and subscribe to the channel for more analysis.